Well, good morning, all. Luke here with your morning market update, subbing in for the great Peter Switzer today. This week, all eyes are on Australian GDP and the US jobs market. Those are two key signals that are going to shape investor sentiment as we head into December. Here at home, we're getting a major economic update on Wednesday. It's going to really throw the economy in the spotlight, put the pulse on the numbers, and see how we're going. As we get the September quarter GDP. Now, the consensus says that the economy probably grew around 0.07%. It's lifting annual growth to about 2.2%. That's a sign that rate cuts earlier this year might be doing their job without actually tipping us into a downturn. We've got a wave of data across housing and spending that are coming out this week as well as the Reserve Bank's latest chart pack, which is great for nerds like myself. It's going to give investors like all of us a clear picture of growth and inflation and how that's tracking. Zooming out in the US, jobs data is in the spotlight. Obviously, the official payrolls data is delayed because of the shutdown that everyone's coming out of over there. We'll still see private sector updates from the likes of Challenger, for example. Plus, we'll get new inflation figures known as the PCE, which is the Personal Consumption Expenditures Index. That's the measure that the Fed likes to use to check on rate cuts, and it's dropping later in the week. So we're actually going to see if those December rate cuts from the Fed are going to come to fruition. On the company front, we've had Metcash and Collins Foods on the docket for this week for reporting. If you're interested in food news, we've got some on Switzer Daily as Eljana gets taken over for $1 billion bucks. Very much worth a read from Peter. Wall Street, we're seeing updates from Salesforce, Macy's, and more, just to give us another snapshot of how things are going for companies that deal in cloud, AI, and of course, retail. Lots of data to watch this week. We'll make sense of it all for you on Switzer. Good data is always going to be positive for the markets. Lines go up, money printers go brr, all of the likes. But if the data underwhelms, we could see markets lean defensive again, like we have in the last couple of weeks, favoring those safer plays with more reliable earnings. We'll bring you more throughout the week, but in the meantime, I'm having a coffee.